Hey guys, welcome back. You're still tuned into Trading Hour here on CNBC TV18, and let's get a conversation going on where the markets could be headed from here on. We have Trideep Bhattacharya joining us from Edelweiss AMC to discuss the way forward and some individual themes and pockets as well that could look attractive right now. Trideep, thanks a lot for joining us, and season's greetings to you and the entire team. A very happy Diwali from us over here at CNBC. We want to, start by asking you, since we're getting into a new year, the conversation has been a lot about the fact that the broader market has run up so much that are we going to see the large caps catch up this year? So what is your sense? Do you think this coming year could see a big catch up from the large caps? Will a bulk of the action come from that pocket?
Good morning. Wish yourself and all your viewers a very happy Diwali and prosperous New Year. And thanks for having me on your show. I would say that, yes, while mid and small caps and broader markets have done quite well, we are kind of meaningfully away from the peak. One example that I would like to give you is if you look at the number of IPOs as an example of froth, which usually comes at the peak of the market. I mean, over the last, if we analyze over the last 20 years, I think the money raised from primary markets is still about 1/5 of what we have seen at the peak. So we are nowhere near with regards to, really froth across the market. There are some pockets where things have done well and a bit too much, but otherwise broader markets are still very fine for it from an investing standpoint. That's the first point I would make. I would say that the valuation anomaly which existed about 6 months ago between mid, small and large has kind of gone away. So in that context, I think opportunities lies across market caps. It's probably time to be a bit more selective between in mid and small cap category. And if you ask me today, in that context, multi-cap as a category is the best way forward over the next 12 to 18 months for investors who are looking to invest, as you said, in Samvat 2080.
Okay, so perhaps some of these, multi-cap funds are the way to go. Trideep, hi and season's greetings to you. Wish you a very happy Diwali and a bright start to a new prosperous Samvat as well. So, I want to ask you specifically about the one area of the market that saw a tremendous rally in the last year, and that is, of course, defense railways, this PSU complex. The question is, can this still keep making money for people? Or is it time to step away, lighten positions here, and look elsewhere?
So, hi, Surabhi. Thanks for having me on your show. I would say that overall, defense, in my opinion, is a decadal theme. But if you ask me, over the next 6 months to 8 months, we would probably see a pause before the run. And have the stocks having done quite well over the last month or so, once we have seen a bit of correction in pockets, we've actually kind of taken a more favorable view towards power and some of the stocks which are still reasonable in terms of valuations in that context, because we think that as India Inc. Reaches a capacity utilization of 75% odd, the power deficit is a situation that we have to deal with as an economy. And irrespective of how election goes and how the government decision making happens over the next 3 to 6 months, this as an area will continue to be a hotbed from a growth standpoint. I mean, if you look at the last result season, some of the numbers that have come about in this domain also pontificate to this direction. So on net balance, defense still a decadal theme, but we think that there could be a pause before we see a growth coming back. And in that context, power is something that we have taken a particularly positive view on in our portfolios of late.
Okay, you spoke about power, defense as well. And, like you mentioned, that there is pockets like defense perhaps move in these very large cycles. Is that what you believe for real estate as well? I mean, I know you do see longer cycles in pockets like this, but do you think what we're seeing in the real estate basket is just the start of things? And at this point, when the sector overall has already rallied more than 50%, do you still think it poses a very attractive opportunity? And then how would you play it? Is it the, standard real estate companies? Is it the ancillary companies? How do you look at that?
Great question. So I would say that the real estate story in India is relatively quite unique with regards to India versus that of the rest of the globe. First is to appreciate that. I mean, after having seen a fair bit of consolidation on account of demonetization and also RERA and various different structural reforms, the sector dynamics are fairly clean. And finally, what we observe is the inventory across India is running at about 12-year low. Now, when such a circumstances happen, usually the only direction is up. So that's where we are in as a starting point. Now, when you compare this with what's happening in China or United States, where companies are going through the negative side of rates going up, this is relatively more sanguine and more genuine in the case of India, and truly has the potential to make the K-shaped recovery that we have seen so far more broad-based. That's the first point I would make in favor of the sector. Now, the way to play the sector are really two, as you highlighted. One is the direct plays, which are the builders and the likes, which have done quite well. And we have held some of these names, and they have done quite well. But over the next 2 to 3 years, I have taken probably a little more positive view towards the indirect plays. And when I say indirect plays, I'm talking about the tiles, the building materials, and the likes, because at a later stage of the project, these are the places where people spend on. They are a little more brand sensitive rather than commodity sensitive. Companies are relatively cleaner, and the runway for growth is quite profitable and quite strong. So on net balance, we are overweight real estate in our portfolios, but more so the indirect plays rather than the direct plays.
Okay, so real estate, but through the indirect route. Got that, Trideep. Finally, what else? I mean, leave us with your best bet, best pick, best wealth creation idea in terms of themes for this new Samvat.
So my sense is that, I mean, the overarching theme continues to be manufacturing over consumption. And in that context, we continue to bet on CapEx as a theme overall from the next, not only just 1 year, but 2 to 3 year perspective. The areas that we have taken a little more positive view of late have been NBFCs. And we think over the next 12 to 18 months, as rates peak and they start coming down, NBFCs within lending financials would have their time in the sun better than what they've had before. And third area is, as I pointed out, is power. I think we have come on to realize that the power deficit situation in India is probably worse than what we had initially anticipated. And hence, companies who are participating in the way to solve this problem would see a good run up in terms of their earnings, as well as a way forward in terms of share price performance. So these are the three areas that we have incrementally taken a more positive view on and are exposed to in our portfolios.
All right, very interesting conversation. Trideep, thanks for joining us today. And you were speaking about the mutual fund bit in the beginning. So we definitely, will plan more on that and have you on for a full chat. And that we've seen how the retail participation has just been going up. So that'll be very interesting as well. That is Trideep Bhattacharya with his call on the market and some interesting themes as well for the new year. But with that, it is time for a break. As we do that, here's some interesting news. MC Pro